right, everyone, this is Vishal from EQUITY.GURU, and today we're going to talk about have the US stock markets and I guess global markets bottomed. Is this the bottom of the current bear market trend right now? I got to take you back to the beginning of this week because it all began with European equities for me. If you've been following any of the markets here for the past month, a bit more than a month, a lot of the indices around the world have just been holding a range, right? So it's been quite boring. Stock markets have just been ranging. Whenever there's a strong green day, everyone gets excited, but then the next day you get a big slap down, no momentum. And that's typical of a range, right? Because we are just holding within two levels, making this sort of rectangle-like shape. However, everything changed earlier this week when European stocks, actually, the German DAX, the French CAC 40, the Euro Stocks Index, all of a sudden started to jump and break out of their ranges, which is the signal that I personally look for from a technical analysis perspective, because it is actually a type of market stage. This is Stan Weinstein's stage analysis. He calls it stage 1, stage 2, stage 3, stage 4. But basically, in technical jargons, stage 1 is a range, stage 2 is an uptrend, and then stage 4 is a downtrend. Stage 3 is also a range. Generally, it's a topping pattern and a bottoming pattern. Obviously, in this case, we're looking at a range being the bottoming pattern. So stage 1 here leading to a new uptrend or a stage 2. And you can see here, he also tosses in the 30-week moving average as his preferred technical indicator. I use something a bit different, but moving averages are moving averages in my opinion. And the key is that breakout, right? So once you get that breakout off a range, that triggers the next stage, in this case, stage 2 or an uptrend of his stage analysis. That's what I'm seeing on the charts. So from a technical perspective, we are seeing those breakouts, again, as I said, on the European equities. And we have also seen those confirmations actually yesterday on July 19th on the S&P 500, on the NASDAQ, also on the Dow Jones, and also the Russell 2000 or the US small cap. So they've all broken out. Now, the big question is, can they sustain this momentum, right? Because we've gotten those breakouts. Longs are triggered if you are a technical analysis trader. And we are looking at, the next resistance zones, which are 1925 on the Russell. Well, let's just focus on the S&P because it's a nice broad market around the 4,200 level on the S&P 500. Major catalysts are upcoming though, folks. So next week, we are hearing from the Federal Reserve on July 27th. And then on July 28th, we get the Q2 GDP numbers. And if that is negative, then the US is officially in a recession. And many people are saying that the markets are pricing in 100% probability of recession by the end of this year. And the reason why markets see that as a positive thing, that means that central banks will have to reverse policy because they tend to cut interest rates when there is a recession, which means if bond yields begin to drop lower, and interest rates begin to drop lower, then there's going to be only the stock market really to go to make yield, right? You're going to see money run back into these riskier assets because money is forced to run to riskier assets to make yield because you're not going to make much in bonds that are yielding, much lower if interest rates are brought back down. So that's the thinking. But again, depending on what comes out from the Fed and from that Q2 GDP data, those are major market moving events which can basically nullify all these breakouts in the equity markets, right? So what I mean by that is we have our breakouts, but if we close back below these breakout levels on all the US market indices, that would nullify the uptrend. And as you can see right now, we are in the process of retesting, right? We did see a bit of a breakout. Prices did drop back to touch our breakout zone. And as you can see by the wicks here, buyers are stepping in for now. So I just want to, emphasize that as a swing trade, this is a possibility of making another wave higher. But the big trigger for me still remains on those weekly charts, because we have those head and shoulder patterns, which are major, bearish breakdown reversal patterns on all the equity market indices. So what I really want to see to turn full bullish is a close back below 42, or close back above 4,200 here on the S&P 500, and the same sort of technical levels that you'll see on the NASDAQ and the Dow Jones, which is still quite ways away, right? So this swing trade could literally just be a relief rally or a pullback in the broader downtrend market here. So keep that in mind. Things are looking good so far with this range breakout, but we want to see that momentum be sustained, and there are major event risks upcoming. So keep that in mind. I should also mention the European Central Bank, because their interest rate decision is actually coming out on Thursday, on July 21st, where they are expected to raise interest rates for the first time since 2011. So that's potentially going to be market moving, especially, what the forward guidance is going to be, what the European Central Bank is going to say. So technical analysis here so far indicating that we do have a breakout, and now it's all about deciding whether we sustain this breakout in all the equity markets, or if these breakouts turn to be false breakdowns. So as of now, positive, but it really depends on the next few days candles, and if we can remain above our breakout levels. That's it for me, folks. Let me know in the comments below if you guys think this is a bull trap, or if you think that this is really indeed the bottom of this bear market cycle. I really want to know, and I'm looking forward to reading the comments. Good luck trading out there. It's going to be some volatile week ahead, but I'll catch you guys all in the next chart attack video.